Okay, all right. Those are the top headlines. But the breaking news now is the AMFI data that we have been getting. Net equity inflow has come in at 22,691 crore rupees, which compares with 26,700 crore rupees. This is on a month-on-month basis. It is lower than February, but higher than what we have been seeing in last couple of months as well. So a small blip that we are seeing in the net equity flows, but that is what the market mood was as well. If we talk about the small cap and the mid cap funds, that's an important number to watch out for, because we've seen stress tests, we've seen that big fall in the mid cap index in a particular time frame in the month gone by. So that is something that will be very important to track. I saw it briefly. The small cap flows have come off sharply, and that is something that should come up for you on the screen as well. Here, the large cap inflows, they have surged, of course. That is something that was expected as well, at 2,128 crore rupees, which compares with 921 crore rupees. The debt scheme outflows, they have continued at 1.98 lakh crore rupees. This is versus inflows of 63,800 crore rupees. This is the year-end phenomenon that we see usually. But as I said again, we'll have to watch out for what the small cap and the mid cap funds have done. That will be an important data that I'm looking at and watching out for, because so far we have seen that small cap and mid caps, they have been in focus as well. Small cap funds, just to give you a reference, in February, the inflows were at 2,922 crore rupees, and in the mid cap funds in the month of February, it was at 1,808 crore rupees. And it is come down in the month of March, is what we are seeing right now. In terms of the other data, ETF inflows, they have come in at 10,560 crore rupees, which compares with 6,461 crore rupees. ETF flows have increased. So this is largely the picture. I would request my team to show me the data for mid caps and small caps as well, because that is an important data that we need to watch out for in this particular month, because of whatever we've seen in the month gone by. So we'll just wait for that data to come by in terms of what small caps and mid caps have done. I think that will take some time, but do you have any data that you've seen, Vivek?
Well, the first data that stands out, of course, is the large cap data. So large cap data, February, was close to 921. This time around, the data is much higher significantly. The other key point that the market will be watching out for is going to be the SIP number. SIP number has been consistently trending higher. In fact, if you look at the SIP number in the months gone by, in February, it was over 19,180 crore. So in the conference call that AMFI will host, in a couple of hours, that particular number will be revealed, and that will be something also that the market will be taking cues from.
Just taking this from you, the small caps have seen an outflow this time of 94 crore rupees, which compares with continuous inflows that we've been seeing. So that's a big takeaway, that finally there has been an outflow. And do remember that the small cap index or the small cap funds saw record high inflows in the month of June at 5,472 crore rupees. That has come off sharply. In February, it was 2,922 crore rupees, and now it's an outflow in small cap funds. So that's definitely the big headline that we have from these numbers. In terms of mid cap funds as well, it has seen a sharp decline from levels of 2,666 crore rupees in November. It has come down to levels of 1,000 crore rupees in the month of March. Yes, of course, it is an inflow. Nevertheless, small caps are the one which are seeing an outflow, but of course, it's a big fall that we've seen in mid caps as well.
Certain portion of that could be attributed to the fact that in the month gone by, you did see comments coming in from SEBI in terms of stress tests being conducted, as far as the mid cap and small cap funds were concerned. So on the back of that, certain redemptions may have been seen. So we'll wait and watch for in terms of more data that will come in. But moving on, this is our special segment, Mid Cap Movers. We have
that mutual fund discussion forward and welcome a guest. Let's welcome Anthony Heredia, the MD and CEO of Mahindra Manulife Mutual Fund, joining us now. Anthony, good afternoon. Thank you so much for joining us. Always a pleasure speaking with you. Well, I have to talk to you about that big outflow that we've seen in the small cap funds. What do you make of that? Mid caps also have ebbed. Do you think there's a clear shift towards large caps now?
Hi, Sonal. No, I don't think there's a big shift towards large caps. I think there's a large shift towards flexi and multi-cap. And I think it's a shift that's been in the works for some time now, because if you look at the data, even in Jan and Feb, flexi and multi-cap funds were seeing increased flows. I think what's happened in March is we've seen higher than usual redemptions in small cap. I don't think you've seen gross flows come off that much, but it's obviously resulted in a net outflow for the month, which is the first for, I suspect, 15 months. But I think the clear preference we're seeing in the marketplace is for flexi and multi-cap funds, not as much for large, because flexi and multi-cap funds, by definition, in any case, typically have 50 to 60% large caps.
Thanks for that, Anthony. Anthony, just wanted you to answer a couple of questions. Number one, March typically, fiscal year end, do you see a phenomenon where you do see some amount of profit booking or some amount of money being taken off the table by retail participants in the broader end of the market, which is the mid-cap and the small-cap funds? And secondly, do you feel that there has been an impact due to certain comments coming in from SEBI in terms of stress tests also been undertaken for these schemes? So what has been the impact of that, according to you?
So let me put it in two parts, right? March, there is a year-end phenomenon that always plays out in the sense that a lot of non-individual investors, primarily corporates, take some money off their balance sheets in terms of their investments in liquid funds and arbitrage funds. So you see that in this March data, and that's true for March for many years before as well. So that's one side of it. The second is, I think, it's not really just the regulators. I think there's been general commentary over the last 3 or 4 months on valuations being stretched in small and mid cap. And I guess the conversations around stress test and all of that would have led to some profit taking for sure, would be across retail and high net worth in my view. But early indicators in April seems to suggest that redemption pressure seems to have eased. But I continue to make the point I made in the earlier question, which is, I think there is a trend change. So the total gross flows in the industry are still intact. The net flows are broadly in line. It is just that the new category of choice seems to be flexi and multi.
Okay, flexi and multi are the big choices now. What about hybrid funds? Because, there was an expectation because of whatever tax changes we have seen, it would move towards hybrid. It has actually fallen in terms of flows. How are you looking at this category?
So the one reason for the flows to drop off is principally arbitrage, right? So if you actually deep dive into the hybrid numbers, arbitrage has typically tended to be anything between 7 to 10,000 crores of net flows over the last 2 or 3 months. And it's actually negative this month because, like I said, a lot of corporate investors who invest in arbitrage funds as well take money off the table. Having said that, I would concede that work still remains to be done to make hybrid funds a credible alternative to fixed income funds post the tax law change in March last year. My gut feel, and that's something we are working on, is I think the hybrid fund that one needs to focus on in terms of creating awareness is multi-asset. Because to my mind, a combination of fixed income, gold, silver, and equity is probably the most realistic hybrid alternative to fixed income. I hope that in the next few months, we'll have more pleasant news to discuss in terms of flows into that particular space. To my mind, multi-asset will have to drive the hybrid category's response to fixed income. I don't expect straight balanced funds and balanced advantage funds to do that.
Okay, so you're saying that, going forward, the trend is going to be, number one, look at hybrid funds. Number two, look at flexi cap funds. Typically in the past, you've been an observer in the space for quite some time. Typically in the past, whenever you've seen some outflow come in as far as the mid-cap and small-cap funds are concerned, does the trend continue? How long do you see an outflow coming? Or, so far we've had very strong inflows coming in there. So do you expect this trend to continue at least for the next quarter?
I would expect this trend to continue for perhaps the rest of the year. Because bear in mind that as we speak today, while we had a difficult March in terms of small and mid-cap parts of the market, we're already at highs again, right? So I think a lot of investors are now playing the next leg of the rally through flexi and multi, which to their mind has a perfect solution, which is you have close to 50% in large caps, but you're not letting go of the possibility of small and mid caps continuing to perform. So my sense is over the next couple of quarters, flexi and multi-cap funds will continue to gain the larger proportion of shares. And consequently, because money in some sense is finite, small and mid-cap funds will see their flows perhaps not reach negative territory like it has in March, because that's a particular phenomenon related to conversation at that point. But I think you'll find that it will be a lot more tepid compared to what we've seen over the last year.
Okay, so it could be tepid. We also have another guest joining us now. Anand Vardarajan of Tata Asset Management also is with us. Anand, your take first on the ebbing flows in small caps, in fact, outflows that we've seen. And also wanted your word on the debt category. There has been an outflow this time. Is it just the year-end phenomenon that we've seen, and how are you looking at that particular category going forward?
So as far as small and mid flows are concerned, I think up until March they had been pretty strong. I think March AMFI had there was the stress test which was put out, and there were different types of numbers which emanated out of the stress test. And not surprisingly, I think mid and small became as a consequence, we saw mid and small flows thinning in the month of March. I think what is interesting is if you were to look at the large and mid numbers or large cap numbers, I think there is a bit of a shuffle which is happening there. So categories which are historically large cap tilted, like the flexi cap or large and mid or say large cap, I think at the margin have seen much better flows than their own past. To your second question on debt, I think March typically has many triggers. You have advance tax, you have the usual monthly GST outflows, and then you have the year-end balance sheet pressures, which lead to a lot of outflows. Liquid has been a big category where we've seen very large outflows. It's almost 20-25% of the category which we saw as an outflow. All this usually happens in the month of March, but this time I thought it was quite severe. I think the entire pack, I think not surprisingly, you saw yields had shot up towards the end of March. Even short-term rates were looking very, very attractive, primarily because of the very, very tight liquidity situation. And this time around, I thought it was even more fierce than usual. From an MF perspective, if I were to talk about, I think this time there was tremendous amount of pressure, around the end of March, which now has, of course, abated, and now things are looking very, very comfortable. But yeah, I think did go through a churn.
Thank you so much to both Anthony as well as Anand. Some very interesting insights coming in there. We'll wait and watch by also for the SIP numbers. But let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.